In this video, I want to talk about 3 tech stocks investors are saying to buy right now, so you can go ahead, add them to your watch list, do your own due diligence and research on them. And these 3 ideas are: number 1, a buying opportunity pre-earnings; number 2, an undervalued trading opportunity; and number 3, a potential long-term growth and value play for you. So my name is Pierce. I'm the founder of investorwaves.com. We track 250 plus of investors across YouTube, podcasts, and newsletters to serve as actionable trade ideas. So we have a stock ideas feed on the website that pulls in all of the different trade calls from different investors out there. We have the top investors by return percentage. This is always a work in progress, but we have our top investor currently at 64%. We have a 63% and a 57%. And then we take those top 10 investors into a portfolio, and we're currently seeing at 18% returns on that. So without further ado, getting into it, the first stock is going to be Oracle. So Oracle is currently down 3.55% in the last 5 days, and it did kind of have a small green day today, but it's trading down 17% in the past month. But really, the topic around Oracle is around their earnings call, because the next earnings call for Oracle is going to be at the start of December. And here we have Corey talking about how there's a potential buying opportunity in Oracle pre-earnings. So he says this stock has sold off almost all the way to pre-earnings. I mean, you can see, yes, it's had a good 6 months if you kind of zoom out, but the last month it's kind of got beaten up a lot. But he basically says that his break-even price is $249 on some options, but he's not really concerned with Oracle at all. He believes it's a strong company, and as soon as the market recovers, that this stock's going to be in the $280 to $290 range. So currently sitting at $240 a share. But the thing with Oracle, though, is yes, this could be a good trading opportunity before earnings. Maybe if you see this as a good earnings call, maybe you get in early right here before earnings. But there is some mixed opinions, right? There was Rob Spivey, who was on MarketBeat's YouTube channel, who came out and basically said that he is not buying Oracle at all, not even as a trading opportunity, because he doesn't believe in the moat, right? Basically, he says to avoid Oracle, arguing that by shifting focus from their regular ERP model to kind of this data center play with OpenAI, that is compromising any durable competitive moat that they've had. And he advises staying away, but there could still be some opportunity here to get in before earnings if it's a good earnings call for them. And kind of that sentiment around the moat is backed up here by Stock Story here on stockstory.org. They say they would not buy Oracle because its poor revenue growth shows demand is soft, and its cash burn makes them question its business model. So Oracle, yeah, they've been a company a long time. I mean, since 1977, they're over a $600 billion market cap. But they say the cash burning history makes them doubt the long-term viability of its business model. And their operating margin is kind of suggesting it may fail to gain leverage on its fixed costs. So go ahead and go check out this article here from Stock Story. If you're a long-term investor of Oracle, it may be helpful, but maybe in the short term could be a buying opportunity in Oracle pre-earnings. So getting into the next stock is going to be Adobe. So Adobe is trading at $328 per share, but they've also been a little bit red on the month and down 16% in the past 6 months. But talking about Adobe, this is a company that here Everything Money thinks is a long-term growth and value play, because they have deep roots in places like creative, software, marketing tools, and digital documents. And then they've also had this strategic push, like every other company it feels like, into the AI space, where it feels like they've kind of positioned themselves as a compelling long-term compounder. And they have consistent revenue growth, 30% bottom line margins, 90% gross margins, obviously, because it's software, hard to beat. Another better business model in terms of software. And he thinks the strong free cash flow makes it a very attractive company from the fundamental perspective. So Everything Money is rating Adobe as a strong buy for investors looking to take advantage of its sustainable competitive advantages. So if you're looking for a longer term opportunity, that is Adobe stock right now. And they are navigating a bit of a challenging landscape at the moment. Obviously, with their huge kind of dip in share price, 33% in the last year. But despite this, analysts are projecting a potential growth of an estimated 14% EPS increase for the current fiscal year. So analysts are kind of on the side of maybe saying this is potentially undervalued at the moment. And there has been some insider transactions as well here. You can see that there's been some significant insider purchases, including those from Congresswoman Green, which may indicate strong confidence in Adobe's long-term viability. So that is Adobe. Let me know in the comments what you think of Adobe stock. And getting into the final stock here is going to be Meta. So Meta has also seen a pullback of 10% in the past month. It kind of seems like tech in general has pulled back a little bit here. But in the last 5 days, they kind of held their own, trading and consolidating here. But Meta is a $1.5 trillion company. And here we have Corey saying that he believes Meta is an undervalued trading opportunity when you're looking at the price to sales, which gauges its future potential guidance on making profits. And Meta is like at an 8 or 9 about right now. And they just got some upgraded analyst ratings a few weeks prior to this dip in the last month. And it was about $900 price target. They had one at $850, and then you've got the stock trading about $600. So I went and did look at the full Meta stock forecast by analyst, and he's right. They did have the $900 price target here, the $910, $875. These are very high price targets. I mean, if you look at all of these, there's not really one under $770 per share. And there's no one saying that this is a sell rating, which is very interesting. Trading at $630 per share, that's very compelling. And it really comes down to how much you believe in the AI race. Like, I think they're spending over $70 billion just in the last year on AI R&D and development, and how much you believe in their glasses product, right? So let me know in the comments what you think of Meta. And those are 3 potential tech stocks to look at in the short and long term. And I send out 3 stock ideas per day in your newsletter. So click on the link in the description if you want to receive that. Just click on it, enter your email, and you'll receive 3 stock ideas from around the internet each day. Without further ado, let me know in the comments what you think, and I'll see you in the next video.